Today I wanted to show a follow-up to yesterday's blog post that had a video entitled How to Interpret the Footprint. Today there was a great example in the S&P E-minis that I wanted to show how to use it along with the NYSE tick, which you can see I have along the bottom of the chart here. Right here, this pane is the volume breakdown indicator, which was shown in yesterday's video. And then I just have a simple delta footprint. This is a 1-minute chart. I have it on a 1-minute chart because it's going to be easy to see this example along with the NYSE tick that I have down below. Now we're gapping open. This was the 8:30 open, and the market gapped open significantly higher. And so I want to show what it's going to look like as the market trades. We're going to start it up 15 minutes into the day. And you can see how the tick and delta, the real key thing here will be how the tick and the delta are behaving and how well they complement each other, as well as showing the information that the footprint is showing. So today I'm going to show the playback window. This is under File. If you choose File Playback, it'll show this window. I've specified a quote page. I created a quote page that has two symbols in it, and that's the S&P E-mini and the NYSE tick. The nice thing by doing it this way is I can then open up the playback window, select that quote page, and it'll replay both symbols on the chart. So let's click play. You'll see what's going on here. So notice I have it basically showing us 30 minutes of trade each second. So it does play back pretty fast, but you're going to see a rally coming in here. And I'm going to pause it just a second. But here's what we want to look for. Look at the values, and we'll look for either divergences or ways that these two indicators are complementing one another. Notice that the tick had started to turn higher, and so was the volume breakdown indicator's price was bottoming out here. And so now we're going to look for some confirmation here to this upside. You can see it certainly is spitting the trades out awfully fast here. You can see the buying, certainly buying. Look at these extreme tick readings that you're seeing. This is what I want to show. Real extreme tick readings. Many of them above 1,000. And I know many traders, I'm going to pause it here, many traders, when they see extreme tick readings like this of over 1,000 or even maybe over 800, they're looking to possibly fade the move. Or what can you read into the chart or this information that's being presented on the footprint that can help aid in the decision not to fade this move but possibly join in on the upside or hang on to longs for a longer period of time. And here's what I want to show. This is one of the most important things you can take away from today, is despite the fact that you're having these high tick, NYSE tick readings, what is the volume breakdown indicator showing you? Almost every single bar, except for this one, you had a positive delta. You were seeing aggressive buying in every bar, which is telling you that it's definitely a strong trend, especially the fact that these are all consecutive, and telling you probably not to short it. Maybe don't even think of shorting until you see the tick start to pull back and you start to see a negative delta, which is going to be crucial. So let's go ahead and hit play again and just let this play out. So now from here going forward, this major move is done, but let's now look at how these relate. These highs in the volume breakdown indicator, how are they relating? Are they as extreme as you saw in this initial move? So we broke out to the upside again, but notice how these compare. Now the tick was still high, but it wasn't as high either. So this is confirming that this extension or breakout to further highs is somewhat contained despite the high tick reading. It's just telling you that the aggressive buying that was here previously isn't quite there. You're still seeing some buying, but you're not seeing the extremeness in that buying. And that's really what I wanted to convey, mainly just catching a move to the upside and seeing what that looked like. Now, as a follow-up to yesterday, I want to show what this would look like on a non-time-based chart. And one of the ones I showed yesterday was a 1 1/4 range chart. So let me go back to this move to the upside. I'm not going to do the playback, and in fact I'm going to remove this tick because it's not useful when looking at it on, or it doesn't really apply. I'm going to change this, but here's what this 1.25 range chart would look like. This was the bottoming out process, and look at the delta, right? You can see it was basically positive every step of the way. You can monitor the color, certainly do that, but you could see this thing was just straight up, and again really start to see the turn in that order flow. But complementing this along with that NYSE tick provides a nice traditional way with the NYSE tick to confirm what you're seeing on this volume breakdown indicator, and gives you a couple things to lean on when you're trying to read the price action like this. All right, well that's it for today. Thanks for watching. We do plan on doing more of these, so stay tuned to the blog. You'll see these coming up. We're going to try and do one a week at least, and hopefully you find them useful. Please feel free to comment on the blog as well.